Think about it. A company in Japan is buying oil from South Korea. Neither party is American. The oil isn't coming from America either, but the payment is being made in dollars. Why? The answer to that question leads us to perhaps the least understood yet most critical mechanism of the modern global economy, the petrodollar system. And this system comes into question again during every major geopolitical shock, especially during crises that threaten the flow of oil. Let's start at the beginning. In 1944, while World War II was still not over, the world's leading economies came together and redesigned the global monetary system. Through the Bretton Woods agreements, the dollar was established as the primary currency of international trade. Other currencies were pegged to the dollar, and the dollar was pegged to gold. This arrangement functioned for roughly 30 years. But its foundations were not solid. The real turning point came in 1971. That year, the dollar was severed from its gold backing. In theory, this eliminated the fundamental pillar supporting the dollar's value. The equation that said only as many dollars can be printed as there is gold in the vault had been broken. So how did the dollar survive? How did it actually grow stronger? The answer: oil. Through critical agreements reached in the mid-1970s, the global trade of oil began to be conducted largely in dollars. Major oil exporters agreed to sell their oil in exchange for dollars. In return, they received security guarantees and economic cooperation. The agreement looked simple on paper, but the effect it created was historic in scale. How does the petrodollar system work? If the world wants to buy oil, it first needs to acquire dollars. To acquire dollars, it either has to sell something to America or borrow in dollar terms. This cycle creates a constant global demand for dollars, and that demand continuously supports America's economic power. You can think of this as a privilege. America can borrow in its own currency at near unlimited scale, something no other country possesses. Economists call this exorbitant privilege. This privilege has concrete manifestations. America's borrowing costs remain low. The dollar dominates global reserves. The vast majority of international trade is still priced in dollars. But this system has one weak point. It is built on trust. The petrodollar system rests on the assumption that major oil exporters will continue to conduct their trade in dollars. If that preference changes, the system's foundation shakes. Historically, this system has been questioned during every major Middle East crisis. The 1973 oil embargo tested it seriously for the first time. Some analysts at the time predicted the end of dollar hegemony. Their predictions didn't hold, but their questions never lost relevance. The core issue is this: the petrodollar system is not guaranteed by any international treaty. It is not a legal requirement. It is built on habit and a balance of interests. The quiet moves of major powers. In recent years, an interesting picture has been emerging. Some of the world's largest economies have begun experimenting with non-dollar currencies in bilateral energy trade. There is a slow but observable diversification trend in central bank reserve compositions. These moves are not yet large enough to shake the system, but the direction is interesting. Looking at history, reserve currency transitions have never been sudden. The shift from sterling to the dollar took decades. The British economy declined, confidence in the pound eroded as war debts mounted, and the alternative slowly gained strength. Nobody woke up one morning and said, "Effective today, the pound is invalid." The transition was slow, quiet, and cumulative. That's why, when looking at today's developments, it's important to see the big picture. not individual headlines, but directions. The tension between oil and the dollar keeps growing. When oil prices rise, dollar demand should theoretically increase, because more dollars are needed. But at the same time, higher oil prices lead to inflation, which erodes the dollar's purchasing power. This tension was clearly visible during the 1973 crisis. Oil became expensive, inflation exploded, and the dollar lost value. The system was shaken, but it didn't collapse. Why didn't it collapse? Because the absence of ready alternatives is the most powerful factor preserving the status quo. As long as there is no alternative more liquid, more predictable than the dollar for global trade, the system holds. What about gold? Gold rising during periods of geopolitical crisis is no coincidence. Gold is history's oldest barometer of a confidence crisis. When confidence in the dollar system is shaken, demand for gold increases. This relationship goes back centuries. And during every major geopolitical shock, this pattern repeats itself. The fact that central banks have been increasing their gold reserves in recent years can also be evaluated in this context. This is no coincidence. It is a reflection of a preference shift at the institutional level. Every major war has transformed monetary systems throughout history. Every major war has also transformed monetary systems. World War I effectively ended the gold standard across much of Europe. War financing required printing money, and the gold backing could not be maintained. World War II gave birth to the Bretton Woods system and made the dollar the global reserve currency. The cost of the Vietnam War made it necessary in 1971 to sever the dollar from gold. Each time the same mechanism played out. War requires extraordinary spending. Extraordinary spending pushes the limits of the existing monetary system. When those limits are breached, the system either transforms or collapses. The big question we need to ask: will the petrodollar system come to an end? The honest answer: nobody knows. Making prophecies is not the purpose of this content. But we can say this: no financial system has ever remained unchanged forever. The gold standard was dismantled. Bretton Woods collapsed. Every system took shape according to the conditions of its time, and when those conditions changed, the system transformed too. Some of the conditions that could threaten the petrodollar exist today. Whether the threat becomes reality, when and how. These are open questions, but asking the questions is far more valuable than waiting for the answers. Money is more abstract than power, but more lasting than power. Wars end. Treaties are signed. Borders are redrawn. But monetary systems, who trades in which currency is held in reserve, these continue to have an impact long after the dust has settled. A decision made in 1971 still stands behind every dollar in our wallets today. Perhaps history's greatest lesson is this: generals determine who wins the war, but money determines who wins the peace. This content is for informational and educational purposes only. It does not constitute investment or financial advice. If you enjoyed it, don't forget to subscribe, like, and share your thoughts in the comments. Take good care of yourselves. See you in the next video.